Hello, good afternoon everyone. It's me Susan Tiwari with the student number TIA8172 from Holmes, Brisbane. Today I'm going to have a presentation on the subject of corporate accounting with cash flow statement and income statement based research. I have my presentation here through my laptop through PowerPoint slides, so hope you will enjoy it. Let me start with the topic of income statement. Income statement is the statement which records the revenues and expenses of the company for a specified period of time. This statement shows the profitability position of the company. With the help of this statement, investor and management can take various decisions. The various financial ratios can also be calculated using this statement. This statement records all income and expenses, whether the cash has been actually received or paid or not paid. This is one of the primary statements prepared by the company. It shows both operating and non-operating expenses. Now let's go to the second topic that we have on our topic, that is cash flow statement. In cash flow statement, it is the statement which records only cash receipts and cash payment of the firm for a particular period of time. The statement shows the liquidity and profitability position of the company. This statement can be prepared using the direct or indirect method. The cash flow statement also shows the changes in the balance sheet of the company. It also considers the changes in working capital of the company. This statement is divided into three sections. First, the operating activities, second, investing activities, and third, the financing activities. Now let's go to the usefulness of income statement and cash flow statement for investors. Income statement records the revenues and expenses of the organization for the particular period of time. Cash flow statement records only cash receipt and payment of the organization for a particular period of time. Income statement enables the investors to evaluate the profitability position of the company, and cash flow statement enables them to evaluate the liquidity position of the company. The income statement tells them the value of their shareholding in the company. The cash flow statement tells them the quality of their earning. So these three topics were related to group A questions that we have in our individual assignment. Now let's go to the group B sections where we have almost 12 questions that were tutorial questions and 2 sub questions for the research questions. Now on that topic we have 3 financial year that we need to do on 3 companies. Those 3 companies were BSP Limited, Santos Limited and Fantastic Limited. Now let's go how we evaluated the financial strength of BSP Limited. Current and expected to generate high cash flows in future. They have the investment of money in high return projects. The repayment of loans was leading to reduction in liabilities. They have bought back of shares leading to high earning per shares. They have the high dividend payments and ability to pay more payment in future. They have the ability to finance all investment from cash flows from operations. Now let's go to the second topic, the second company, that is Santos Limited. Let's go to the evaluation of financial strength for Santos Limited. The positive cash flow from operations and expected to generate more in future in Santos Limited. They have the investment of excess cash flows in project to increase return on investment. They have the repayment of borrowings and their ability to finance capital expenditure and dividend payment was high. Now let's go to the third companies, that was Fantastic Limited. The evaluation of financial strength for Fantastic Limited are as follows. Negative operating cash flows from operations due to high huge payment to suppliers and employees. They have more investment in intangible assets. The borrowing and issue of fresh share capital to cover the negative cash flow from operations was high. They have the dividend payments too. They have the long-term borrowing to repay commercial bills. Now, according to our questions, the main questions that we need to solve on our assignment was to evaluate those companies, how they have the profitability case, how they were having the dividend case, how they were having the investment case, and who was the best among all of those three companies compared to all of those years. According to evaluation of companies from on the perspective of lenders or us, if we will compare them, then it will come following answers. A lender will not choose Fantastic Limited, as Fantastic Limited does not good solvent as well as liquidity position. Therefore, a selection has to be made between Santos Limited and BSP Limited, and it is obvious that everybody will choose BSP Limited over those two companies. There are different reasons why we should choose BSP Limited in the case of other companies. It is because of the high profitability in the case, and return on capital investment was high. It has also high earning per share in case of BSP Limited. It has high dividend payments, the high return on investment which reflects high operational efficiency. The repayment of borrowing shows the capability of a company to generate funds internally. Santos Limited has also failed when we compare return on investment and company's ability to generate surplus cash flow to take care of capital expenditure, repayment of loans, and huge dividend payment. Therefore, lender or everyone will select BSP Limited over Santos Limited and Fantastic Limited. We have evaluated all those companies from as for the lending perspective from the following 3 years 17, 18 and 19 through the internet source provided by our teacher. So guys, thank you very much for listening to my presentation. So hope you have really enjoyed my presentation. Thank you very much.